After Fed Reserve slashed interest rates to stem the economic threat from the coronavirus, Bank of Japan has also eased its credit policy. To infuse more money into Japan's market, Bank of Japan has responded with further buying of risky assets. The Bank of Japan will purchase exchange-traded funds, but no cuts in interest rates has been announced. The move is in order to combat the widening economic fallout from the coronavirus outbreak. After the Bank of Japan announced emergency monetary policy measures, Tokyo's index Nikkei surged, but the rally quickly fizzled and the index closed more than 2% lower. Coronavirus developments over the past few days also prompted the Reserve Bank of New Zealand to cut the official cash rate to 0.25%. The rate cuts came in an unscheduled announcement. New Zealand Central Bank has also said that the rate will stay at this level for the next 12 months as quote-unquote very weak economic activity is seen in the coming months. Now, fears over the economic impact of the coronavirus has savaged global markets. Australian shares plunged in today's trade with Sydney's benchmark shedding 7% at the opening. In the largest ever percentage drop, Australia's main share index closed 9.7% lower. The index tumbled 537 points to 5,002 mark. Other Asian indices have also seen major cuts in Monday's trade. Hong Kong stocks opened sharply lower and the index Hang Seng traded down over 4%. China's Shanghai also inched lower with over 3% cuts, while Kospi slumped by 3%. Meanwhile, another big sell-off gripped Indian markets in Monday's trade. Benchmark indices, Sensex and Nifty both plunged more than 5%, with Nifty hitting the level below 9,500. The worst hit sectors were metals, both public and private banks, and realty. And volatility index jumped 11%. Analysts around the world see markets' reactions worrying as the situation is seen worsening, and that could bring the global economy to a stall.
Well, today's market is reacting to the current coronavirus situation. Even on last Friday, global markets had a huge rebound, and a lot of investors were expecting the market would do better. However, the overall coronavirus cases in Italy or in the US are still soaring. Investors still worry about the situation can worsen, and that will bring the global economy to a stall. Even the Fed cut the rates near to zero this morning. Investors now worry a little bit more that it could be a sign that even the Fed is worrying that the economy is going south in the future. So that's the sentiment around Asia. However, the situation is not as bad as a lot of people would think, because even the Dow futures are dropping a huge number now. The Asian markets are holding up relatively well.